Good morning. It's Friday, the 8th of November, and this is Govindraj, Ethiraj, broadcasting and streaming from Mumbai, India's financial capital. The take. Should it be something more than Donald Trump? Well, I guess you've read a lot already, so let's take a break. And let's focus on airlines, particularly those that are still grounded. For 5 years now, while landing or taking off from Mumbai from the city's secondary runway, I've been seeing these Boeing 777s, which are very large aircraft with Jet Airways logo and colors gathering dust. Jet Airways shut shop in 2019, and the system, for lack of any other word, has struggled mightily to find a resolution. And now the Supreme Court has ordered the airline's liquidation, a decision that should finally bring closure for what it's worth. Speaking of worth, Jet Airways has about 11 aircraft in all parked in Mumbai, Delhi and Hyderabad, going by reports. One Boeing 777 should cost about $300 million or about 2,400 crore rupees by current conversion rates. A report in CNBC TV 18 says all the aircraft could fetch about 1,500 crores on the higher side. So I'm guessing this is the scrap value of the metal and parts and not obviously flyable aircraft. There are some other sundry assets, including some office space and assorted equipment, running into a few hundred crores of rupees. Now, Jet Airways shut down because there were problems with its books, and the founder, Naresh Goyal, had allegedly diverted funds that had been borrowed from banks. But the point is not what happened before 2019 when the airline stopped flying, but after. The case meandered through the National Company Law Tribunal, a consortium of buyers called Jalan Kalrock, with no evident track record in aviation, or for that matter, even anything, took over and could never cough up sufficient funds to actually get the airline flying again. Among other things, an association of airline employees knocked on various doors to get back the gratuity owed to them. The previous employer was gone. The new one said that they had nothing to do with it, so the matter dragged on. And in another bizarre twist, the Tehsildar of a Mumbai suburb, as an authority you usually think of in more rural settings, attached for aircraft. How the Tehsildar attached the aircraft and what the Tehsildar intended to do with them subsequently was once again not clear to me. The collector of Mumbai told the Hindustan Times in January several years ago that she was only responding to a labor court who had passed orders about pending dues of Jet Airways. The Tehsildar said in January 2023 that since Jet Airways does not have any office in Mumbai, we have restrained sale of their aircraft. Either they can pay the employees or else we auction the planes and recover the money. The story of Jet Airways is the story of a collective systemic failure in recognizing the time value of assets in the inability to deliver a speedy resolution for a business dispute. It also tells you how many different arms of the state could entangle you if your businesses were to go under for whatever reason. Not exactly the best advertisement for ease of doing business. Assets worth billions of dollars which could have been saved and put to good use if only they were in the right hands or taken up in the right hands and not left rotting in different corners of different airports across the country. When it comes to disputes, the state has refused to recognize depreciating assets, or so it seems to me, whether it was Vijay Mallya's aircraft or Jet Airways' fleet of all perfectly normal aircraft at a point of time. One Airbus A319 belonging to Mallya's also defunct Kingfisher and parked in Mumbai had turned into nothing better than scrap and must hence be sold off in scrap, the Mumbai International Airport told the Bombay High Court in December 2016. The tax authorities apparently, however, claimed their estimates valued it at $12 million. Eventually, it went to scrap. Earlier, a private jet belonging to Mallya, a 11-seater Hawker 700, was once again sold as scrap after being parked for 3 years. In all these cases, these aircraft could have been sold off and the funds parked in escrow, if nothing else, even as the cases against Mallya dragged on. And in both cases, Goyal and Mallya, banks were on the other side fighting to get back their loans. They could not or did not, however, see that what they were trying to get back was draining value every minute they were grandstanding in the courts. The NCLT was set up to address precisely this lacunae, that businesses that face failure or can fail and their assets can be turned around quickly, like Chapter 11 in countries like the United States. It's worked in some cases, but its failures, such as in the case of Jet Airways, are so spectacular that they drown everything else out. There is a time value to resolving business failures once again, particularly when there are physical assets involved like plant and machinery or aircraft. Just because these assets are in private hands does not mean they have no or had no realizable or monetizable value. Value that could have and will benefit taxpayers of the country like you and me. The lack of accountability for such delays makes things worse because all agencies play football, focusing on the principle of keeping something grounded rather than recovering that economic value. At times like this, you would not be blamed for thinking it's more lucrative and safe to be a scrap dealer in India rather than set up a venture involving physical assets. And that brings us to the top stories and themes of the day. The stock markets fall as the Trump party hangover now sets in. Gold and copper prices fall sharply as the dollar strengthens further on a Trump victory. Why potato onion prices will stay higher for longer and keep food bills high. And what power consumption trends tell us about economic activity.
This is the Core Report with Govindraj, Ethiraj.
The markets crash once again. The Trump victory party on Dalal Street lasted precisely a day. Why the market shot up so much in India on Wednesday was not clear at all to start with, except for the fact that they seemed to be keeping company with Wall Street. But they could not obviously keep company for another day because global markets, including on Wall Street, were strong on Thursday overnight as well. So clearly there was no fundamental reason for Indian stocks to rise as they did on Wednesday. The Sensex was down 836 points at 79,541, while the Nifty 50 was down 284 points at 24,199. Elsewhere, the easing of money continues. The Bank of England cut interest rates by 25 basis points on Thursday to 4.75%. The Federal Reserve may cut rates too, and that's something that we have to wait till Thursday morning. This marks the central bank's second such reduction. We're talking about the Bank of England after it began its easing cycle in August, according to the CNBC. The rupee-dollar dance continues. The Indian rupee hit another lifetime low on Thursday as markets bet that a Trump victory would likely boost the dollar in coming months. The rupee dipped to 84 rupees 29 paise, inching past the previous all-time low of 84 rupees 28 paise hit on Wednesday. The specific bet, says Reuters, is that Trump's policies of tax cuts and deregulation are likely to lift U.S. growth, prompting investors to prefer the dollar over other currencies. On the other hand, the threat of tariffs, which Trump has promised repeatedly to unleash, could undermine euro and Asian currencies. Gold and copper prices fall. The Trump wave impacted more markets. Gold and copper prices plunged as Donald Trump reclaimed the White House with a strong dollar putting pressure on commodity prices, Bloomberg reported. A cheaper gold price, of course, is good if you are in the market to buy them in countries like India. Bullion fell the most since June, and copper had the biggest drop since July 22 on a closing basis and pushed the dollar up the most since 2020. Gold had already gained about 4.5% or nearly $110 in October, Bloomberg reported, adding that copper had fallen 4.5% during a broad sell-off on the London Metal Exchange, also tracking steep losses in the Chinese yuan. Bloomberg said that along with the immediate impact of a weakening currency in the world's top commodities consumer, traders are also getting ready for a potential knock to demand if Trump follows through with pledges to deepen the US-China trade war. It's not clear how this all adds up because the trade war could lead to higher tariffs in the United States, which obviously would be inflationary and could possibly negate some of the other benefits. Anyway, protection is of course good business for some. Steel stocks jumped 13%, the biggest gain since March 2009, as once again the Trump administration said that it would slap tariffs on steel imports from across the globe. Food prices are rising again. Back home, food prices are zooming up, and that's driving up the cost of a food plate or thali in Indian homes. The reasons range from inclement weather to export curbs, which in turn disincentivized farmers from planting more onions. On year, the cost of a home-cooked vegetable thali rose 20%, and that of a non-veg thali, after actually falling for 12 months, rose about 5% in October. The cost of the veg thali, according to CRISIL Market Intelligence, rose because of an increase in the prices of vegetables, which account for about 40% of the cost of that thali or the food plate. In October, prices of onions and potatoes, the key culprits, rose 46 and 51% year-on-year respectively, thanks to lower arrivals, which in turn was thanks to incessant rainfall in September, which of course is a delayed rain. Prices of tomatoes more than doubled from 29 per kg in October 23 to 64 per kg in October 24, again due to those September rains that affected arrivals from states such as Maharashtra, Karnataka and Andhra Pradesh due to crop damage and festival demand. And when we say delayed rains, we actually mean extended rains because rains should be fading out in September. Prices of pulses, which account for 9% of the cost of that vegetable thali, rose about 11%. Thanks to a lower opening stock, a lower stock pipeline, and festive demand, says CRISIL. On the other hand, it could have been worse were it not for a 11% drop in fuel costs from 903 rupees for a 14 kilogram LPG cylinder or cooking gas cylinder in the city of Delhi in September last year to 803 rupees in March this year. I reached out to Pushan Sharma, Director of Research at CRISIL Market Intelligence and Analytics, and I began by asking him to talk about the larger trends he was seeing in food prices and tomatoes, onions, and potatoes when seen over the year, in contrast, obviously, to last year, and also importantly, how he was seeing price trends in vegetables in coming months. And from all of this, perhaps we could deduce or conclude how our thalis would look like in terms of cost.
If we look at the trend over the last couple of years, in fact, the top concern on food inflation side is TOP, that is tomato, onion, and potato. Now, if you look at retail onion prices, they averaged around 26 rupees between August 22 to July 23. And ever since August 23, they have not traded below rupees 30. And in fact, they breached the rupees 50 mark in September and October this year. And one major reason for this is that around 15% lower onion production took place in March this year. And that's for the Rabi season, which accounts for 2/3 of India's annual production. Now, if you look at onion and where it is being produced in India, 75% of the production comes from 4 states: Maharashtra, Madhya Pradesh, Karnataka, and Gujarat. And Maharashtra alone contributes more than 40% of the production. So, how the weather plays out in Maharashtra, how the farmer sentiments are in this region plays a very critical role in the overall production scenario. And if you recall, there was an export curb that was put last year on onion, and that prompted farmers to move away from the crop, which led to the 15% sowing decline last Rabi. And because of that, the lower production for the Rabi season, now in September, October, the Rabi stocks have depleted. And that is what is causing a sharp increase in onion prices. If we talk about tomato, what we see is that unlike onion, the crop is more dispersed across the country, with Madhya Pradesh, AP, Karnataka, Tamil Nadu, and Odisha accounting for half the country's production. The crop is also grown across multiple seasons. So while onion is heavy in the Rabi season, tomato is spread across Rabi, the summer season, as well as the Kharif season. Now, what differentiates onion and potato from tomato, rather I should say, what differentiates tomato from onion and potato is that it is highly perishable and hence more prone to weather-related losses. So compared to last year, we're seeing that tomato inflation is not transient this time. Typically, it happens around June, July, and then starts to wane off. But over the last 4 to 5 months, tomato inflation has persisted. And that's largely attributable to weather-related concerns, either higher temperature during March to May period, excessive rainfall in July to September period. So that is what has caused the inflation on the tomato side to be more persistent this year. And lastly, coming to potato, what we see that among the TOP category, this tends to remain the least volatile since it gets supplied consistently from cold storages throughout the year. But what we understand is that the stocks have dwindled in the cold storage because of low production coming in from West Bengal and Punjab, which account for lion's share of potato production. And that is what has caused a spike in potato. Now, moving to the non-vegetarian side, what we see here is that the broiler prices had been coming down. And till November, we see that the high base is going to help broilers still print low prices. But from December onwards, we may see broiler inflation in the mid to high single digits because of the low base that will start playing out from there.
Right. So, and if you were to look at the three together, Pushan, that's tomatoes, onions, and potatoes, and look at it over last year, what would be, let's say, the weighted average difference, roughly, give or take, between what a consumer was paying last year versus what she's paying this year?
So if you look at the 3 commodities, onion, potato, and tomato, what we see is that if you take the average price for this year, Jan to October, and compare that with the average for the calendar year last year, onion is about 25% higher on year, potato about 34% higher on year. Tomato is in fact almost flat. And the reason for that is we had really a sharp spike in July and August last year where the crop had breached 100 rupees mark. So that's the reason why, because of that spike, it's printing a flat number. But if we exclude that, then this too will be in the double digits.
So overall, you would say that year on year, accounting for all these ups and downs, prices of food, of course, are high, but potato and onion are particularly high. My other question, which is sort of follows from this, is that what is the likelihood that this will continue like this? Is there anything that's changing? For example, you said potato is clearly benefiting from cold storage, but the other two are not. Onions, you also said, was linked to the fact that there was a curb on exports and therefore that disincentivized farmers from planting it, which is an interesting thing. What can change or not change in, let's say, the next year? And therefore, how could we look at prices?
If we talk about, say, onion, what we see is that the outlook, we can see some moderation in prices for onion going ahead. And the reason why I say that is if you look at the prices for last November, right, the prices were around 59 rupees, which is 10% higher than the current levels. Right. So we are going to have a slightly high base, which will help us see some moderation in the YOY growth. But in case of tomato, the current prices are much higher than what we saw last year, right? So that is actually not going to be beneficial in case of tomato. And that is also the case with potato. Last year, the prices for potato were 25 and in November, and this year they're above 30, right? So onion can see some downside, but tomato and potato will see some persistence till about December. And then a lot will depend on how the Rabi planting is. For both onion and potato, these are heavy on the Rabi side. So how the winter planting takes place for these crops is going to decide a lot. But looking at the early trends when we are speaking to farmers, what we see is that the planting could be good because the prices are favorable right now and the reservoir levels are also good because we've had normal rainfall.
As you look ahead, so there is nothing, as I gather, that's structurally changing which can influence or keep down prices of these three key vegetables going ahead. I mean, if we have good rains and good weather, then things will work out. If we don't, then things will not work out. My question is there anything in our control or not?
No, there is a lot that actually can be done. So, for example, sometimes we see there are export curbs that are put in place. And I gave you the example of onion, where that export curb can have a short-term benefit, but it just delays the problem. So we saw the problem actually come in and play out this year. There needs to be, structural measures that need to be taken. Another important and interesting aspect is that if you look at food inflation pre-COVID and post-COVID, right? If you look at the period 2016 to 20, we saw that the food inflation was quite subdued, around 3.6%. Between 2020 and 24, it's averaging about 6.5%. So it's 300 basis points higher. Overall inflation, on the other hand, is only 150 basis points higher. So the instances of more weather-related concerns are increasing, and that is something that is causing this impact. Now, what can be done to address this? We would need structural measures more than here and now measures. We firstly need to address the concern of post-harvest losses for fruits and vegetables. Now, in an economy like India, which is growing, our consumption for fruits and vegetables is going to keep outpacing that for staples like rice and wheat. And hence, that consumption or demand needs to keep pace with the supply. One easy plug there is to reduce the post-harvest losses. Government's own data suggests that the post-harvest losses for fruits and vegetables is between 6 to 16%. So plugging that itself can bring in 1 month of supply into the system, right? So that's one aspect. The other is we need to increase the yield. So to catch up with the increasing demand, we need to invest in better quality seeds and inputs that increases our yield. Given that there are more climate-related incidences, we need to invest in climate-resilient seeds. And that's definitely the need of the hour. And finally, on storage and processing. If we're able to conserve what we have better, process it when we have supply glut situations, and that can be brought into the market when the demand really picks up, especially during the festive season. So these are some of the things that we need to really focus on.
Right, Pushan. Thank you so much for joining me.
Thanks, Govind.
Can power consumption trends reflect India's economic activity? India's power consumption rose marginally by about 1% to about 140 billion units in October compared to a year ago, mainly due to a heavier base effect, according to the Business Standard. In the year-ago period, power consumption grew something like 22%. The highest supply in a day, which is the peak power demand, dipped to about 219 gigawatts in October 2024 from about 221 gigawatts in the year-ago month, which is last year. In contrast, the peak power demand had touched an all-time high of about 250 gigawatts in May this year. That's, of course, peak summer for you. The larger question in some ways is, of course, what are the power consumption trends telling us, both about the nature of production, which is a combination of renewable energy sources and conventional energy like thermal power, and, of course, on the other side, demand. And how does that compare with last year? And what does that tell us in comparison or in contrast about the shifts in economic activity? I spoke with Victor Vanya of EMA Solutions, a power market analytics company based out of New Delhi, and I began by asking him to describe how he was looking at the data from the last 6 months.
If you look at the last 6 months, especially if you talk about election period, starting from March, April to June, we saw a surge of around 15 to 10 to 15% increase in energy consumption has been observed. And that's, again, you also see that this peak demand, the record peak demand also coincides with that period. And that's, again, after that, we see that the load started to come down. And now the demand which we see right now is more or less close to what we have observed in the last year. If you remove the election activity, additional election activity where there's a lot of excess supply which is given or excess load which comes in during that period in every 5 years cycle, that's a common trend we observe. Apart from that, we don't see any major change or major drop in load. It's more or less going closer to last year's demand. Again, slight differences we see month on month is because of the change in weather patterns, because sometimes it may be heavily raining in last year, October, or this October, it's a little different from what's last year. But apart from weather changes, we don't see much of an impact of other economic activities on the demand side.
And what is that telling us if you're saying that the numbers are roughly similar to what they were last year?
If you remove the weather impacts, there is no much of a difference in terms of economic activity when we compare it with last year's. The major difference we see right now is only the deltas which we observed with respect to weather changes, but there are no major economic indications of growth, just if we compare this post-election season in an isolated manner.
Right. And if you were to look at, let's say, the components of energy production, is there anything that's influencing the way demand is either demand or supply? Which is, when I say components, I mean the increasing proportion of renewable energy, including solar, and maybe reduction in coal based.
Because the coal stock we took the coal stock to around 30 days this year during election season. And hence we see substantial production and supply in terms of coal is concerned, coal-based generation, thermal generation. But after that, right now what we see is this season we have substantial increase in hydro energy compared to last year. Maybe around 30% of excess hydro energy production we had this year. Solar, because we are adding more and more solar energy from year on year, the highest increment in terms of net energy is concerned, that we see in solar energy production. And it's around 25 to 30% growth in terms of solar energy. That's the change we observed this year. And that's, again, when you see the exchange prices during solar hours, we see that the prices have dropped considerably compared to last year. And again, this is the impact we see due to increased production in solar energy.
But while all of this is happening within the energy production system, this has not really impacted the total output or the demand in between last year and this year.
Not much.
Okay. And finally, how is all of this playing on prices, Victor, in terms of what the user pays or potentially what the user could pay?
Since we have a liquid spot market, that's again the benchmark we see in terms of the actual price of market-based prices in the market. So here, if you look at the market prices, this year we see that there is substantial drop from August, September onwards. We see that the prices have dropped considerably. Last year, we saw that the prices touched around 7 rupees on an average. But right now, we see the prices in the range of 4 rupees and below 4 rupees on the spot markets. That's, again, this we see immediately after the election. There's a drop in the prices, and that's still going on. And we expect that the prices to continue on the lower side this year till next summer comes.
And you would say the main reason for prices staying low is?
Again, weather changes, and then we have increased production in terms of hydro energy, as well as there's some capacity addition from solar energy. These two combined, and then there is also a drop. Again, we didn't see much of an economic growth in terms of there is no fundamental increase in demand. And the weather has also impacted now. This compared to last year, we have the weather impact is more on demand, wherein we saw that from August onwards, we saw that the demand hasn't increased much because of various factors like humidity and all, which plays a major role from August, September onwards. But that impact is very less compared to last year. And since weather has subdued the demand and there is no net increase in economic activity in terms of electricity demand, fundamental change in electricity demand is concerned, now we see that the prices have dropped.
Right. Victor, thank you so much for joining me.
Thanks, Govind.
And some feedback before we go for the week. Neil Mail says, your report is a great start for my day. Truly appreciate your consistent outlook, effort and dedication. Srinivas Chillara says, this is the first of your videos I have not watched to the end and venture to comment. The thumbnail should have said nervous speculators rather than nervous investors. Haha, don't you think? Aditya Banerjee says, Govind, if you had any clue, you would have made some predictions for the next 2 quarters. Yes, I agree. I could have made some predictions and maybe I should try, but then I would think that would put me in the same boat as many of the people who've got these markets wrong. Nevertheless, thank you for your feedback, Aditya. Abhi Win says, private sector is not hit because of private players, but no support from government for borrowing. The medium and small enterprises are glorified, but no actual support on ground. Ella says, wonderful content as usual. Appreciate your video simplicity and focus on the facts. Thank you once again for all your feedback. Bye for now. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.